Do you think Cathie Wood will become any less bullish on Tesla's stock? Cathie Wood, an avid supporter of innovation, has always expressed her optimism about Tesla despite numerous hiccups. Even when others have been scrambling to sell off Tesla shares, Wood has been snapping them up here and there. Wood has another revelation about Tesla stock, and you definitely would not want to miss this. The EV opportunity alone is enormous, star investor Cathie Wood said, referring to Tesla. ARK's 2026 price target for Tesla stock would be around $500 per share based on its EV business alone. The firm's analyst Cathie said the projection is adjusted for the 3-for-1 stock split that became effective on August 25, 2022. This represents additional context for the 2026 pre-split price target of $4,600 that the firm announced in mid-April 2022. Cathie noted that the firm is removing autonomous driving and any form of ride-hailing from the valuation framework. The firm believes that these two factors will drive more than 60% of Tesla's value over the next 5 years. Cathie also noted that the $500 per share projection is more than a fourfold increase from the stock's current levels. Do you think Cathie Wood will become any less bullish on Tesla's stock? Cathie Wood, an avid supporter of innovation, has always expressed her optimism about Tesla despite numerous hiccups. Even when others have been scrambling to sell off Tesla shares, Wood has been snapping them up here and there. Wood has another revelation about Tesla stock, and you definitely would not want to miss this. The EV opportunity alone is enormous, star investor Cathie Wood said, referring to Tesla. ARK's 2026 price target for Tesla stock would be around $500 per share based on its EV business alone. The firm's analyst Cathie said the projection is adjusted for the 3-for-1 stock split that became effective on August 25, 2022. This represents additional context for the 2026 pre-split price target of $4,600 that the firm announced in mid-April 2022. Cathie noted that the firm is removing autonomous driving and any form of ride-hailing from the valuation framework, which they believe will drive more than 60% of Tesla's value over the next 5 years. Cathie also noted that the $500 per share projection is more than a fourfold increase from the stock's current levels. ARK Invest CFA Cathie said in a tweet in early January, "Our 2026 price target would become roughly $500 per share post-split based on EVs alone, more than a 4x increase from the current price." Referring to Cathie's tweet, ARK Invest Director of Research for Autonomous Technology and Robotics Sam Corris said, "The company's superior drivetrain efficiency and low battery cost should make it one of the best positioned to weather any cyclical slowdown for automakers. As it has done in the past, it can be the first to lower prices, which puts pressure on other automakers." Agreeing with the analyst's views, Wood said Tesla does not need autonomous ride-hailing to be a success. "The EV opportunity alone is enormous," she added. Tesla's goal, according to the fund manager, has been to drive prices down and increase EV adoption. At the March 1st Investor Day, CEO Elon Musk could announce a step function drop in pricing to $25,000 for the next-gen EVs, she said. Wood further noted that gas-powered vehicles boomed at that price point. Cathie Wood's ARK Invest expects EVs to scale from about 8.5 million units in 2023 to tens of millions by 2026. In 2022, Tesla sold about 60 million units, capturing roughly 75% of the market. According to Wood, this estimate might even be conservative. Known Tesla bull Wood stated that Tesla is 3 to 4 years ahead of the competition in battery costs and is unparalleled in chip design and data assets for autonomous mobility. She explained it further by comparing it to Apple Incorporated's chip design for smartphones versus that of Nokia, Motorola, Ericsson, and BlackBerry. Wood is such a strong Tesla advocate that she bought more Tesla shares this month, having already increased her Tesla holdings several times in January. In mid-January, Cathie Wood's ARK Invest purchased more Tesla stock as the company reduced prices in Europe, and the U.S. ARK Invest exchange-traded fund acquired a total of 389,305 Tesla shares, worth $47 million at the time. This purchase followed Tesla's announcement of price cuts on its models. In addition to cutting prices on its Model Y, Tesla has notably reduced prices twice in China, combating slowing demand throughout the previous year amid rising inflation and global recession fears. In 2022, Tesla's market value plummeted by over $800 billion, marking its steepest sell-off since going public in 2010, with its stock down more than 60% from its all-time high in 2021. Despite this, Cathie Wood remains optimistic about Elon Musk's car company and has continued to buy shares during the market downer. Recently, she invested $19 million into the EV maker, buying the dip after Tesla missed its delivery and production targets. Wood has predicted that Tesla will reach $500 per share by 2026. However, this optimistic view is contested by more bearish market commentators. Nobel economist Paul Krugman argued that Tesla would never become a profit machine like Apple, as the car industry doesn't offer the same potential. Loop Ventures' Gene Munster also warned that Tesla's stock could face near-term downside if it reports disappointing earnings later this month when it announces its fourth-quarter results. Despite these concerns, Cathie Wood continues to have a positive outlook for Tesla. Her ARK funds acquired 806,663 Tesla shares in January alone, recently valued at $105.4 million. Although Tesla shares plunged 58% last year amid worries about production and demand issues, Wood sees significant gains ahead for the stock, primarily from its electric vehicles. Cathie Wood predicted a five-fold increase in Tesla's stock over the next 5 years during a webinar cited by CNBC. She stated, "If you believe in autonomous cars at all, it's closer to 13 times during the next 5 years. This means a five-fold increase would bring the stock to $653, and a 13-fold increase would reach $1,699. Wood believes that Tesla's aggressive global price cuts are a smart strategy. Tesla is going to be very aggressive in pricing, she said. Tesla can afford to do this. It's got the lowest cost structure and is innovating the most aggressively. Other auto manufacturers will have to follow these price declines, but it will hurt them significantly from a margin and profitability standpoint." When asked why she continued buying Tesla shares during the dip, even as prices fell and performance declined due to interest rate hikes and price fluctuations, Wood explained, "We believe that the leading indicator, correctly, is inflation, and it has peaked. The inflation rate has peaked in almost every measure." According to Wood, this is typically positive for innovation. However, she noted that the market has been extremely skittish and terrorized by the rapid increase in interest rates. "We have never seen an 18-fold increase in interest rates within 1 year. It has truly terrorized the market, and I think that the fear is palpable," she explained. Reflecting on the market, Wood recalled late 2020 to early 2021, when success seemed inevitable. "At the time, I remember saying, keep some powder dry. It is for these moments, or averaging down throughout a period like this, that one keeps the powder dry," she shared. Wood likened 2022 to the late 90s, a period of irrational appreciation in tech stocks. "The technologies were not ready, and even if they were close to being ready, the costs were way too high," she said. Today, Wood believes that 5 innovation platforms are evolving simultaneously in the U.S., which is unprecedented. She mentioned that the seeds for all these platforms were planted during the 20 years that ended with the tech and telecom bubble. The first platform is DNA sequencing, now called multi-omic sequencing, as it no longer focuses solely on DNA but includes other aspects as well. Cathie Wood highlighted several innovations that she believes will drive significant advancements in the coming years. First is multi-omic sequencing, which includes RNA, proteins, and methylation. Wood noted, "It's very complicated but really exciting. We're going to be curing diseases thanks to these breakthroughs, and we've already had one very important breakthrough just within the last week." Another innovation Wood referred to is robotics. Industrial robot costs are